Hello and welcome to episode number 9 of Prosperity by the Pint. I'm your host, Brice Carter, certified financial planner, chartered financial consultant, and certified investment management analyst, not to mention self-proclaimed millennial money expert. This is a podcast where we talk about money, investing, business, and life success, all while having a cold beer. This week, we are going to be talking about taxes. They suck, but we're going to talk about how they work and how they suck. So, this episode I am drinking by Founders, the highly acclaimed, it says right on the bottle, KBS, a flavored stout. And this is a 12% alcohol beer. So, what we've got here, and this is the description from the bottle, is an imperial stout brewed with a massive amount of coffee and chocolates, then cave-aged in oak barrels for an entire year to make sure wonderful bourbon undertones come through in the finish. Makes your taste buds squeal with delight. So, if you are a regular listener, you've probably figured out by now that I like IPAs and ales and lagers. I usually do not drink stouts and porters and such. But I'm told by my team that I need to diversify. That's a good word, diversify. So, I'm trying this stout. I like coffee and I like bourbon. So, I'm hoping that I will like this. So, we'll see. Okay. This is like, I can drink one of these, I think. We'll see. Ooh, the coffee really comes through at the end there. All right. We're going to give you some tasty notes at the end. Okay. It was actually my wife's idea to do this episode. I told her that I think that she needs to be more informed about worldly and current events. And so she's been reading articles, and she read an article recently about how the U.S. tax code system works and how it's a marginal tax bracket system, progressive marginal tax rate system. And she was like, you should do an episode on that and taxes. And I'm like, I hate taxes, but I will talk about them for you, baby. So that's what I told her. So what you need to understand about the tax code is that it's extremely complicated. So we're not going to cover the whole thing here because the IRS Internal Revenue Code is 74,000 pages long. So we're not covering all that shit here. What we're going to cover is the basics, and the basics on state taxes, and the basics on Social Security and Medicare, because those play a lot bigger picture than what you probably think. So this episode is not going to make you an expert on taxes at the federal level or in any given state level, but it might give you a better idea how things work. So let's start out with the federal system. So this actually just got revamped due to the Tax and Job Acts of, I believe it was 2017. It basically went into effect for 2018, and this was signed by President Trump, and it redid a lot of our tax system. The premise is still the same, and we basically have a marginal progressive system. Okay, what does that mean? Marginal progressive system, buzzwords. What do they mean? It means that we have tax brackets that range from 10% all the way up to 37%. So this is where I get the biggest confusion. People say things like, I don't want to get my bonus this year because it'll push me into the next bracket. Or I'm in the 25% bracket, so all of my dollars are taxed at 25%. These are incorrect statements. Okay, we're gonna try to swallow down some more stout here. So I don't know that I mentioned this, but this is a Founders beer. And I would venture to argue with anybody that Michigan is the best beer state, followed only by Colorado and California. Okay? All right, here we go. So marginal and progressive. So the reason those statements are incorrect is because let's look at the first tax bracket. The first tax bracket is you're paying 10% federal tax on the first $19,050. Can we go ahead and just call it $20K? We're going to call it $20,000. You're paying 10% of your income on the first $20,000 of income for a married couple. On the next portion of your income, from $20,000 to $77,000, roughly, you are going to pay 12%. Okay, so any of the income, if you make $50,000, okay, you're in the 12% bracket. But your first $20,000 was taxed at 10%. And the next $30,000 was taxed at 12%. So each time you move up the bracket, only the dollars above the previous threshold are taxed at the new higher rate. So let me say that again. because you're listening and you're not taking notes. If you're driving in your car, I want you to get it. If you make $20,000, you're paying 10% tax on the first $20,000. Okay. If you make $50,000, you pay 10% on the first 20, and then anything above 20, you're paying 12% on. Okay. Once you get above 77,000, you get pushed to the next bracket, and so on and so forth. So the bracket thresholds, just to give it to you real quick, because everybody's going to remember this: 19,000, 77,000, 165,000, 315,000, 400, and then 600,000. So anything above 600,000 is taxed at 37%. So that's the highest federal tax bracket. Is every dollar for a married couple above 600,000 is taxed at 37%. For disclosure purposes, because my compliance department is going to want to listen to this, is please consult your tax advisor or legal advisor before making any tax decisions. ... Okay. So essentially what you need to look at is a situation in which additional dollars above and beyond a certain bracket, only the dollars above and beyond are taxed at the new bracket. That's simple, okay? Now, our tax code has deductions to it. So if you make $20,000, you're not going to pay tax on $20,000 because there's what's called deductions. Okay, you have a child care credit, you have a standard deduction. So let me just say right now, as I'm filming this is February when I'm filming this, and there's starting to be articles coming out about refunds. Okay, so that the new tax code was promised to lower people's taxes, but people are getting smaller refunds. So a couple things on refunds. One, it's not you getting money from the government. It is a repayment to you of your money that you gave to the government interest-free for the year. All right. So out of every single paycheck, if you're an employee somewhere, part of it's going to the federal government. All right. If you get a refund, it just means you paid them too much throughout the year. All right. When the new tax code came out, about 90% of Americans will pay less in taxes. Your refund may be smaller, because guess what? At the same time they passed the tax code, the IRS went ahead and said, well, we need to withhold a smaller amount. All right, so smaller amount got withheld from your paycheck. So don't brag about your refund. That just means you overpaid the government. In a perfect world, you don't overpay the government. At the end of the day, your accountant hands you a bill for $0 and a refund for $0, because that means you withheld the right amount from your taxes. But I digress. The big thing that you need to remember is there's deductions. So the standard deduction for a married couple is $24,000, which means you can make $24,000 and you get to deduct $24,000. So if you make 24 and you deduct 24, you pay no federal income taxes. So if you make, let's just say you make $50,000, you get the standard deduction of 26. You end up only paying taxes on the difference. Okay, so I'm sorry, you get the standard deduction for 24, you pay the tax on 26,000. So I hope it gives you kind of a broad idea of how the federal tax system works, but it basically summarizes it this. There's deductions on there. There's a lot of different deductions. Most Americans take the standard deduction. It's a marginal progressive tax rate, which means the more you make, the higher percentage you pay on the amount of income over the previous tax rate. Look at a chart. There's a lot of them that you can Google. Okay, let's talk about state taxes real quick. So I live in the state of Michigan. Founders Beer, state of Michigan. The beer that I drank in the last episode, Bell's, Michigan. Again, Michigan's the best beer state. We have a income tax here, and it is 4.25%. It's a flat tax. Means everybody that has income pays 4.25%. Some states have no income tax. They usually collect their revenue through sales tax, vacation tax, tourism taxes, things like that. But there's actually 13 states, like Texas doesn't have an income tax, Florida doesn't have an income tax, Wyoming, etc. don't have an income tax. And then other states like California have ridiculously absurd sales taxes, which make me wonder why anybody wants to live there. Sales taxes and income taxes. So California has an income tax of 13.3% and a sales tax of 7.25%. So basically, if you live in California, I am sorry, but there's great places for sale here in Michigan. We have a lovely real estate market. We have like 5-6 different seasons in the year as opposed to 4, and it's lovely here. Come try it. We're not taxed very much. And okay, so let me get to this. Is crazy too. Los Angeles, the city of Los Angeles has an 8% tax rate. So those celebrities that we all know and love to hate, they're paying 37% federal income tax on the top dollar, remember? 13.3% personal income tax to California, and then 8% to the city of Los Angeles, not to mention everything that they buy in the city of in California has a sales tax of 7.25%. They're taxed out the nose. So with states, it can vary greatly. Many states have a federal or have a state income tax. Most have a sales tax in addition. There's 50 different states, 50 different tax codes, plus Puerto Rico. We're not even going to get into that today. But the fact of the matter is, states, federal, add it all up. And then, don't forget, Medicare and Social Security. So, at the high income levels, Social Security and Medicare can get a little tricky, but at the lower income levels, it's pretty straightforward. So on the first roughly $129,000 worth of income, you're going to pay 7.65% to Social Security and Medicare. And guess what? Your employer pays 7.65 on all of your income to Social Security and Medicare. Which means, without you even knowing it most of the time, because this comes out of your paycheck automatically, 15.3% of your income goes to Social Security and Medicare. And guess what? If you're a millennial and you're my generation, we probably won't see that. We might see some of it. If you did a good job of saving, I don't think you're going to see it. Social Security won't look like what it does today. So we pay, in addition to the federal income tax rate and the state income tax rate, Michigan here 4.25%, we pay Social Security tax of 7.65%, and it costs our employer 7.65% to pay to it. This is starting to sound like it's a little bit of a head-spinning headache thing, because it should. Taxes suck, all right? Now, the really shitty thing about Social Security is that when we take it out later, if we get to, if you're in my generation, it's a big if we get to take it out later, you have to pay tax on it again. It counts as income. There's no exclusion for it. So if you make too much money in retirement, they're going to tax on your Social Security all over again. And guess what? It's not a deduction. So if you pay $7,000 a year in Social Security and Medicare taxes, you don't even get to deduct the shit as an expense. It's a forced contribution. I'm thinking I need to do an episode all about Social Security and how that flow through system works. So let me summarize real quick. First, the beer. It's a weird combination for me. I like bourbon on the rocks. Anybody looking to get me a gift, you can always send me that. I like coffee. I think mostly I like creamer. And I like chocolates, but I do not know about a bourbon barrel-aged coffee and chocolate stout, but I'm trying here. I'm trying, guys. I'm trying to appreciate it. It's got explosive flavors. All right, it gets better as it goes, but man, that the flavors really hit you after the fact. So there's been actually some talk lately about raising the taxes on the rich, like 70% margins and things like that. Let's think about this for a second. If you live in California, even if you don't live in LA, you're looking at 37% of your income, federal. You're looking at 13% in state. You're looking at another 8% local tax, maybe. You're looking at Social Security tax, which essentially, if you're self-employed, you got to pay the employer and the employee. You could easily be paying, 50, 60, even more than that in certain areas in income taxes. And then you have a sales tax on top of that, real estate taxes. We didn't even get into those today. So I'm not a big fan of these arguments that the rich need to pay more. Imagine every dollar that you brought home, 60% of it went to the government before you got to spend it. That kind of sucks. So last year tax rates went down overall, and the tax code got simplified, but it's still pretty complicated, particularly since we have 50 different states, and most people don't have a fundamental understanding of taxes. But ideally, this podcast, this discussion will help clarify it a little bit for you. It's a progressive system. It's a system that changes every couple of years, it seems like. And then you have your state to worry about, and some people move around. So I'm hoping you understand it a little more. I'm sorry that taxes suck, and I'm sorry that our education system hasn't done a great job of teaching things like taxes. But there's room for improvement, and there's resources to learn more. This podcast being one of them. So I'm going to wrap up on that note. Don't forget to subscribe, iTunes, Spotify, YouTube, wherever you're listening. We're there. And cheers.